Hi traders, thanks for stopping by thetradinganalyst.com. We're going to take a look at a bunch of charts here. But first, if you're not already a member, go ahead and visit the home page of the website, www.thetradinganalyst.com, and check out all of the member-only features, text alerts, daily watch lists, daily member videos, and a bunch more features. If you're interested at all in the membership, go ahead and visit the page, and you can see our member benefits here at the bottom, and you can start today. All right, so let's get a look at these charts here. First, I'm going to look at GPRO. GPRO made a nice breakout over this resistance. So we've got the highs of these candles right here, as well as over this range of candles as well. So it was also resistance because this level was once support. You can see it was support, 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 and then we broke below it. So what was once support now becomes resistance now that we're below that. So that's why we got rejected at it right here, again right here, and then finally, so now again it becomes support. Okay, so we can use this level to trade against about 11:30 or so, and we've got resistance up here at just below $13, and that's from the lows of these few candles right here. This level was a stronger level that we broke over, so this 11:30 level is a bigger level than that 13 level up here. But once we get up to this 14 level up here, this is where it becomes a little bit more of a resistance. We've got the lows of these few candles here as resistance. These highs of these candles will act as resistance, and the highs of these several candles right there. So nice volume breakout over this 11:30, but we do have quite a bit of resistance for GPRO in the $13 to $14 range, so that is something that you need to be aware of. Next, I want to look at Twitter. Nice breakout over this range right here. We came back and retested it several times before coming up here and filling this gap right there. So that was the gap right around 1770. We filled that, and as you can see, there was also resistance up here from these few highs of these candles, and these candles right there. So a pretty well-defined resistance right there. And on Friday, we actually closed above that resistance, but today we closed below that resistance. Okay, so it doesn't matter why this happened, okay, whether there was a downgrade, an upgrade, it doesn't matter. What matters is that we were above the resistance level and now we're back below it. So it is looking like a potential false breakout. Okay, so that's what happens when a stock breaks over a resistance level and then falls back below that resistance level pretty much right away. Okay, so we still have another day. I want to give it another day before really calling this an official false breakout, because we did hold up pretty nicely. Okay, so I really want to see another red candle tomorrow, and if that happens, then I think we're definitely going to be heading lower on Twitter. If we break back above this $17.75, $18 level, then we can head higher, and we can pretty much disregard that false breakout. But pretty much it hinges on tomorrow's action on what's going to be in store for Twitter. At least that's the way that I am seeing it. Next, I want to look at Apple. So Apple, we broke over this mini resistance right here, and it was resistance from the lows of this candle, highs of these few candles right here, high of this candle right here, high of this candle, and then we closed over it on Friday's session, and again we closed over it today. So another thing I want to mention is we are over this downtrend line. Again, this is not a major downtrend line, so I'm not putting a ton of weight on it. And so what makes it a not a major downtrend line? Well, for one, it's only been around for about a month, okay? So a month-long trend line, is it significant? Yeah, it's a little significant, but it doesn't mean, to me, it doesn't mean that Apple's going to be heading much higher. Apple can head much higher, but it's not going to be, in my opinion, based off of this break of that downtrend line. But with that said, it is a positive sign that it's over that downtrend line and over this resistance at about 96.50. So now this 96.50 is going to be support. So 96.50, as well as this downtrend line that we broke over, is going to be support because it was a resistance and we broke over it. Next, I want to look at Netflix. Netflix here, we have a downtrend line, a couple touches here, couple touches here, and a few touches right around here. So we tried to break over it on this day, couldn't quite do it. Again, on Friday we tried to break over it, couldn't quite do it. You can see that we barely broke over it, okay? The close of the candle is what matters to consider it a true break. As you can see, the high over here, we were well over it, but we closed right at it. Not enough for me to consider that a break. Again, on Friday, same thing. And another thing that we're getting right here is this red candle right here. So that tells me that most likely we're going to be continuing to the downside on Netflix. So as long as it holds below this downtrend line, we're going to be heading lower, and that gap right there at about 91.60 or so from the close of this candle right here is going to be that next logical target if we continue to hold below this downtrend line. We've had several opportunities, specifically this day right here, to break over. We did not hold those gains, okay? So notice we did not hold those gains. We saw a lot of selling from these highs. We totally could have closed over this level right here, but we did not. Again, right here, we had an opportunity, but we did not. And we had an opportunity today to follow through, and we did not. And we did not do that even while SPY, the S&P 500, hit its all-time highs near 214 today. So these are some things that you need to be aware of. Next, I want to look at Tesla. So I know that Tesla got some news after hours. It doesn't seem to be affecting it too much. We're right at 222 right here in the after hours. So a $2 hit, to me, not that big of a deal. So with that said, today's close, we saw a little bit of a volume pop, just a little bit above average right here, and we broke over this downtrend line right here, okay? So to me, it looks like we are going to be heading higher in the short term. We've got about 217 as support. You can see from these several candles right here, about 5 candles right here where that's going to act as support. And then we've also got the downtrend line that's going to act as support that we broke over. And then resistance level right around 235 is going to be that first resistance level from these few candles right here, and then that more major resistance up here at about 241. So between 235 and 241 is going to be that resistance for Tesla that you need to be aware of. Price line right here, we broke over the gap right here. So this was the big gap right here, and this was the open of the gap right around here, around 1300. So we broke over that. Looks like we may want to fill the gap up here. The gap is right around 1389. I personally wouldn't want to push it because this 1372 or so was that resistance level, as you can see right here. And we did break over it on this candle right here, and this was the Brexit reaction right here. So regardless of what happened, this is still going to be major resistance up here at around 1372 to 1390. So once we head up there, I would definitely be lightening up personally, and we could even see some downside from there once it makes its way up there. If we do end up breaking higher, we do have this gap up here around 1447 or so from this candle right here. So that may want to fill if we do end up breaking over that 1390 level up there. So until then, it will remain some major resistance up here. As you can see clearly, several candles right here, 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 and this candle right there. Next, I want to cover Chipotle. Chipotle right here, we're trading in a really tight range. We're trading in a box right here. Chipotle is set for a big move. And why are we set for a big move? Well, because we're in this really tight range. And as you can see, the Bollinger Bands right here are very tight. The Bollinger Bands are the gray line right here, and as you can see, the gray line right here. And if you look on the chart, they're the tightest the Bollinger Bands have been since over here. And we saw what happened after it broke out of the tight Bollinger Bands right here. We saw a big move to the downside. So definitely be aware of the Bollinger Bands. You don't really need the Bollinger Bands. You can just see that we're trading in a tight range. So when the Bollinger Bands are tight, that just means that we're trading in a tight range, and you can just see that with price right here. So we're trading in a box. So if we break outside of the box, either above 414 or below about 388 or so, we should see a big move. So it's recommended to wait for the actual break on the either side of the box, because it could go either way. Most likely the break is going to be to the downside. And why do I say that? Well, for one, we are in a downtrend. We've been in a downtrend for almost a year. Okay, we've been in a downtrend almost a year. You know, this is about October of 2015 is when we saw that big decline right here. And before that, for a couple months, we just traded kind of sideways up here before eventually breaking down right there. So we are in a downtrend. We are below resistance. We are below this support. So most likely the trend is going to continue down, because what do trends do? They continue. Okay, so more than likely, trends are more likely to continue than reverse. Okay, that's just probabilities. Can we break to the upside? Definitely. And it would be a nice move if it broke over 414. But the odds are that it breaks to the downside. But either way, in this box is not really an area that you really want to trade personally, especially on the long side, because you do risk, there is more downside risk. But either way, trading inside this box is pretty risky, because we could see a really big move, and it'll be a little hard to react. So it's best to wait for that break outside of the box. At least that's the way that I'm seeing it over here. Alright guys, thank you for stopping by. Again, if you're not already a member, go ahead and visit the homepage, www.thetradinganalyst.com. Real-time alerts, game plans, watch lists, member videos, and personalized mentorship from yours truly. It's a great opportunity, and we'd love to have you. We'll see you over there.